Hi there, traders. This is Brad Gilbert with the FX Market Insight for Tuesday, the 3rd of September. All right, now let's just have a look at the MyFX Trading Hub and the analysis here. There's a few weird things happening, and usually, if the analysis across the board here lit up like this, okay, with all the non-dollar pairs as the base, well, you know what, and the dollar going up, you'd be very excited. But to me, it's very odd and eerie, right? To me, I've got the market conditions. Well, we've got normal liquidity, but it feels like we're in the eye of the storm. And what I'm talking about is it's these, a lot of these moves, the dollar index, well, the euro is a little bit sort of more central Eurozone weakness, but sterling and everything else is being driven lower, or has been the core result of these core market drivers. Sterling heading lower again. There's all sorts of kerfuffle now. Talk about possible elections ahead of the Brexit deadline, all sorts of crap. It's just losing their marbles over there. But when you come back down, this is one of the odd eerie things too. We have just finishing the US-Canada holiday. Okay, so there's very little liquidity, little activity, and then on top of that, you get the markets and traders trying to work out what the hell is going on. So if you look at the general news services, I mean, this is old news now. It was like a couple of days ago. Euro falls to 16-month lows on gloomy outlook. Sterling obviously sinks. Yeah, possibility of an election. Then there's some random news about emerging markets, Argentina, et cetera, et cetera. So there's not a lot going on, but you know what we can't see is the US-China trade issues, which have been a massive problem. They have sort of just drifted into the background over this holiday. Once again, US holiday, US media has a break. Looks like the Donald hasn't been doing any tweeting, and it sort of just drifts aside. But this will come back into play very quickly. So to me, I like the shape of some of this stuff. Okay, like the Kiwi. Sorry, I was trying to get my pen to work there. Looking at the main pairs here, you're looking at the Kiwi's got really good structure. This is going down for obvious reasons. Now the dollar is going up primarily as there's talk of that, obviously, the recession in the US with the 2 years and 10 years inverted. You've got, obviously, the China-US, no trade deal. Now they're saying they're going to come back to the table. Sterling is being impacted directly just from Brexit. Euro, well, it's Euro weakness. And I think there's going to be anticipation of some more easing or something coming forward. But the rest of the pairs here, this is a bit of one where you can see where something's not right. The rest of the dollar pairs, I mean, dollar Swiss is kicking into gear just probably because euro's going down, but these dollar pairs aren't going up like the dollar index. Now, the dollar index is a basket of pairs, euro being 58% of that. So, you know what? This seems all artificial. US holiday, artificial moves. I wouldn't be surprised to see all of this correct. And once again, this analysis go pear-shaped again once we kick into the live markets again come Tuesday. So, looking at the overall analysis here, you're looking across the board just on the major pairs. Aussie continues to sort of it's drifting lower, but very, very slowly. Kiwi's got a bit more shape, lost momentum yesterday. Dollar yen still continue to drift sideways up and down through the cloud. Here's that sweet move down through 1.1040, 45 on euro. Tested 110 again. That nice big round psychological number, now just sort of sitting there waiting for something else to happen. And then you've got that clean breakdown here through 121 sort of 30 on sterling. Okay, that's all Brexit. And then dollar CAD, it is slowly moving to the top side. But if I widen that out, you would see that it's basically still trading within recent ranges, although making hard work of trying to get above that resistance line. And oil falling back to $54. Now that hurricane smashed into the Bahamas doesn't look like it's going to do too much damage in the US from what I've seen at this stage. So that takes the pressure off oil. Oil price comes back, and that's where we are. So the majors, there's not a hell of a lot going on. And as I said, it's just a bit of fool's gold here on the analysis. Just be careful what you wish for, because as I said, I don't think these moves anyway, this is not like a central bank, like the Fed announcement where everything lights up. This is all like hocus pocus. Euro looks good. Kiwi looks good. Sterling, well, Brexit is the driver there. Dollar Swiss, well, that's just following euro. And Aussie, well, actually, this is a good point. Just looking at where the action's going to come from. So looking at today, we've got some big stuff coming out, particularly for the Aussie dollar. We've got the retail sales figures due, and we've also got the RBA interest rate decision and statement. Now, no change in rates expected from the RBA, but we will be watching closely the statement for clues on, issues with global growth and all that. And then we do have the ISM manufacturing PMI numbers as well. Really a good chance to give that dollar some sort of direction. At the moment, the dollar's going up, so strong numbers is probably what we're looking for. All right, guys, that's it for me. The overall acquired data across most of the pairs, most of the majors, Aussie dollar, the main pair to focus on. It is drifting lower, so any signs of negativity or dovishness from the RBA, and we should start to see it just move a little bit lower. But don't forget, this US-China trade issue, if there's a positive outcome, the Aussie and the Kiwi will be the two pairs that will benefit, and they will go up. And that'll be against the overall fundamental trend. I think that's what's keeping most traders out of it at the moment. All right, guys, that's it from me. Have a good trade day. All the best. Cheerio.